great. Well, we've got a pretty good crew turning out today, which is excellent. This is the very last webinar, which is hard to believe. Okay, let's
Yeah.
go ahead and get started. It's 12:01. Welcome everyone to the very last webinar of the fall 2022 semester. It's really hard to believe that today is November 1st because I blinked and suddenly it's fall. Fall, like almost winter fall. But we're here and we're going to round out this semester really strong. We're going to have a conversation about banking basics this afternoon, which is really important. It's very fundamental. So if you are coming in and this is new territory for you, we're really happy that you're here. If you know a little bit about this, it should be a great refresher and just kind of going to help better position you to keep climbing upwards on that personal finance ladder we've talked about if you've tuned into our other sessions. So before we get started, introductions, right? I'm going to open up a poll for you all. Please tell us a little bit about yourself, and I'll also introduce myself and give my colleague Becky a chance to introduce herself too. Becky, can you first confirm that you see the poll on the screen?
Yep.
Terrific. Okay. Well, for anybody who's just joining in for the very first time, my name is Sarah Metzger. I am an associate with the Financial and Life Skills Center. We're located here at University Park campus, and we are a free resource for students. In my role, I get to host some of these webinars. I also go out and I teach first-year seminar classes and work with a team of ambassadors who do the same. I've also got Becky here with me. Go ahead, Becky.
Hi, everyone. My name is Becky Moore. Happy to be here. My primary role here at the center is meeting with students in one-on-one appointments and just kind of helping with anything that you need.
We love to be helpful. That's our big thing. And hopefully this presentation is helpful for you. There will be other resources we'll share about in just a moment that you can take advantage of to follow up with if you need. We have a lot, which is great. I also want to alert you before we close out the poll and jump to the next slide and get started that this webinar is being recorded. It should have given you a heads up when you hopped in, but if you didn't hear it, this is your announcement. If you need to leave early, that's fine. We're going to have this webinar posted on our brand new YouTube channel, hopefully by the end of the week, if not by the end of this week, early next week. So please do check that out. Becky, if you're able to send that YouTube link through the chat as well as our regular website link, that would be amazing. Please do check out all of the resources that we offer. We've got a lot on our website, everybody, and we want you to make use of them as you need. Okay? All right, I'm going to go ahead and end this poll. It looks like most everybody has responded. We've got a lot of undergraduate students tuning in today, which is amazing. Thanks for joining. Let's go ahead and get started. So we're going to talk about banking basics today. Hopefully the word basics is pretty straightforward. Like we're going to cover some fundamental information. If it's new for you or as part of this conversation, if you hear something that piques your interest that's kind of adjacent to baking, so thinking more about investing for the future and diving deeper into savings, for example, or kind of coming back to the foundation of a lot of what we do with personal finance, which is having a budget, a plan for spending our money. If there are other topics that are coming up for you that are a curiosity, please know that Becky and her team of ambassadors are here for you to chat one-on-one with through appointments that you can set on Starfish. We've also got other recorded webinars, and we've got self-study modules too that dive deeper into some of these topics. So this is foundational, but if you've got a curiosity that piques here, we've got a lot more for you online. Please do check out our website to find out more. But let's talk about banking, right? Let's dive in. So what is banking? It really is important that we have a definition and an understanding of how banking works. It's pretty common. Many Americans engage in banking, but do you know what it is, right? How do we define it? So for this purpose, we're going to say that banking is the business of protecting money for others. So banks take our money, well, we give them our money, and they protect it for us. That money can then be lent out to other people in the form of loans. So individual, you, me, Becky, anybody, we've got money that we want to store somewhere. We give it to a bank in the form of a cash deposit. The bank is going to hold on to that in our account and keep it safe for us. While it's there, it can also be loaned out, right? And that's not necessarily with we're giving permission when we deposit the money, but banks use our money to give out loans to others. Could be me, I could be borrowing money at my own bank, or it could be to Becky, who also banks at that same institution with me. But that loan is given out. The way that we all kind of benefit from banking, that banks benefit and we as consumers benefit, is that when that money, the borrowed money, is returned, it's paid back with interest back to the bank. The bank makes money from that interest, and it also has some to give back to us as consumers who have the accounts within that bank. We get deposit interest. So savings accounts, if you already have one, you are probably familiar with this. You can make free money on the account that you have at the bank. And so that's kind of how this cycle looks in a very simplified form. This is banking at its core. Now, you might have come here today sort of familiar with that, or maybe not very familiar with that at all. Maybe you don't have a bank account and you're wondering, why should I bank? There are plenty of really good reasons to engage in that process. Number one, our money is safe. When we take our money and we put it into an account in a bank, it is safe from loss and generally safer from fraud. Loss in that, if you have cash in your wallet, you could lose that wallet and that money is gone forever. If you have money in a shoebox under your bed, if something happens in your house, perhaps a fire, perhaps a robbery, that money could be taken and never given back to you. But the money that we keep in a bank account, it's safe. And it's also safe from fraud. So, for example, if you were to have your debit card information stolen, and somebody steals money out of your checking account, your bank will help you to get that money back. In some cases, will give you everything that's been taken back in full. That actually happened to me when I was younger. So your money's safe there. You can benefit from that. It's also helpful to have a bank account because it allows you to get your paycheck faster. It makes it easier to pay bills, particularly online. And it makes it easier to make online purchases, which nowadays after COVID, especially, like the ability to make purchases online, to not have to go to a store, was such a major convenience and really allowed people to continue on, especially during the pandemic, in a better way. So why not take advantage, right? Banking also allows folks to transfer money between accounts that they have or between them and friends and family. So if you're a student here on campus, you may be still connected with your family financially. Having a bank account allows you to transfer money back and forth. It allows you to transfer money to friends via apps like Venmo and Cash App, things like that. If you're an international student and you have family overseas or in your home country, you're also able to transfer money back and forth between them. So banks really help us to remain connected in our personal finance world so much as we need it to be connected. And what's great too is that when you open up, for example, a savings account with a bank, it gives you access to other bank products that you might need, maybe not right now, but down the road. So there are tons and tons of benefits to banking. This is really just a short list. There's more to it, but there's a lot, right? I want to caution folks, though, that if they're choosing to not bank or not have a savings account or a checking account, if you've come to this session and you're wanting to learn more because you're maybe on the fence, you're not sure if you want to open an account or not, I want to give you some information about what it means to be unbanked or underbanked and the risks that those folks might take, or kind of what they may be subjected to in those circumstances. So to be clear, when we talk about anybody who's unbanked, this is referring to folks who don't use bank accounts or don't have access to bank accounts, traditional financial services. That would include savings accounts, checking accounts, things like that, credit cards. And folks that are underbanked, these are folks that might have like a savings account, but they're typically using more kind of alternative financial services like check cashing services and payday loans, pawn shops, things like that. So folks that are unbanked typically have to rely a lot on those alternative services, and those are often very costly. So to deposit or to get a paycheck cashed, there's a high fee associated with that. Paying bills becomes more complicated for folks that don't have bank accounts. There's a risk of losing cash, like I talked about, right? If you have it just in your wallet and your wallet is stolen, that money is not going to be given back to you, right? So there are some considerations that folks want to keep in mind, if they're making a choice to be unbanked or underbanked, like these are some of the circumstances that one might find themselves in. In some cases, it's not necessarily a choice that a person is making. I recognize that, but in an instance, if this is you and you're making a choice to be unbanked or underbanked and you're using alternative financial services, please keep in mind that they tend to be costly, and the benefits of banking are really going to allow you in your personal finance journey to be better positioned. Okay. If you've got questions about any of this, please don't hesitate to throw them into the chat. This might be the first time that you're hearing terms like unbanked and underbanked. And if there's a curiosity there, happy to answer some questions. You also have an ability to raise your hand in this webinar. So if you'd like to unmute and ask your question too, absolutely fine. But I wanted to kind of set us up here where we've established like, what is banking, right? How does it work? And then why would one want to bank? Hopefully you do. Hopefully, if you don't already have a savings account or a checking account, you're interested in creating one for yourself. Because really, having those kinds of accounts, participating in banking allows you to really climb the financial ladder that we so often talk about here at the center. It allows you to become the financially healthy person you aspire to be, that you have security in your finances, you've got freedom of choice in your finances. Really to do all of these things that we see in the ladder here, to have a budget, to create an emergency fund, to be able to pay back debts and start to plan for the future and invest for the future. A lot of what's at the core of that is having a savings account or a checking account and having a bank that you work with. So we want to make sure that you recognize, like, yeah, it's important. Banking is important for all the reasons that I mentioned on the slide before, but also to allow you to continue forward in the personal finance journey that you're on. So let's say you're down here, you're starting with a budget. How does banking help? Well, you have a budget to pay bills, you have a budget to set up savings goals for yourself. Like, you want to make sure that as part of like building a budget for yourself, you have somewhere where that money is being stored so that you can then go and spend it as necessary, right? And ultimately, eventually you'll work your way up the ladder. That's what we want for you. So banking is important. All of that to say, banking is really important. So what does the system look like in a little bit more detail? So we understand that generally speaking, like, banks work by receiving deposits that we give them of our money. They loan out money, they receive money back with interest, and they pass that interest down to those that own the accounts or the account holders. Okay, there's the cycle. But in the US, not even but in the US, in the US, with this banking system, it's important to note that there are a couple of different types of banks or banking systems to be aware of. And we're not going to talk about all of them in this presentation because this is a basics presentation, and I want to focus on you as the one who's engaging in the banking process as an individual. So keep in mind that there is the central bank in the US. You may have heard of the Fed before, or the Federal Reserve System. That is the central bank in the US. That is not a bank that you are directly working with. They are not going to be the managers of your savings account. What the Fed is really doing is it's regulating our national banking system. So what you do end up engaging with, the Fed is regulating that. And you've probably heard about the Fed lately, especially in regards to inflation. Inflation's been so high lately. Part of one of the goals that the Fed has is to control inflation. So you've probably heard lately that the Fed is raising interest rates to help cool off the economy and lower inflation. And that's part of the responsibility that the Federal Reserve shoulders. They're also here to help protect consumers. They create policy that really is governing the banking system that you're interacting with as a consumer, which is going to be what you see on the center of the screen here, more likely than not, these commercial or retail banks. And these are the banks that, when you think of the word bank, you're probably thinking of this type of bank. These are the ones that provide checking and savings accounts. They are the ones that are going to issue you your debit card or your credit card, or provide you a loan to buy a car or a house. These are the banks that we tend to deal with day in and day out as part of managing our personal finances, right? There are also investment banks out there. Again, we're not going to focus on these, but if you hear this term come up, these banks are the ones that are managing financial transactions that are very complex, mergers and acquisitions. These are banks that are typically working with governments or corporations. They're not working necessarily with individual folks, right? They may, but oftentimes not. They serve as financial advisors. They may conduct research. They're just kind of operating in a separate world, generally from where you are with managing your personal finances. So we're going to focus on retail banks for the remainder of this presentation because that's what you're dealing with, right? So when it comes to retail banks, there are three types that I want to alert you to, and we're going to dive in a little bit deeper into each of them. There's brick and mortar retail banks, there's online banks, and there's also credit unions. So we're going to focus on these three. I'd actually be curious to know, I'm going to open up a new poll for you all on the screen. For any of you that showed up today who do bank, what types of banks are you conducting your transactions at? Do you have brick and mortar bank that you work with, an online bank, credit union, maybe a mix? It's not uncommon for folks to actually have multiple banks that they are storing their money at or that they're conducting business with. And I'm seeing a pretty good mix of everything. Brick and mortar, online banks, and credit unions. More so folks are saying online banks, which I almost wonder too, and maybe this is a hard poll to respond to because you might be thinking, well, I have a brick and mortar bank, but it also offers online banking, like I can log into my account. So like, does that count as a an online bank? And I'll chat a little bit more about that. Okay, so we've got a good mix. Nice. All right, so let's look at brick and mortar banks a little bit closer here. So brick and mortar banks are going to be the banks that you walk into, that you can walk into at least. These can be national banks, something like Bank of America is national. Regional banks, PNC is a little bit more regional, and then local banks. I've got a local bank back home in Chicago. It has 3 branches. It's very tiny. So you've kind of got a scope of brick and mortar banks here. And what's important to know about these types of banks is that they're FDIC insured, up to $250,000 per depositor, meaning that your money is safe. I talked about that on an earlier slide. Should there be some sort of loss of your funds in that institution, you are insured up to $250,000 in total for those accounts, which is a great benefit. And what's important to know too about brick and mortar banks is they may end up charging higher fees and offering lower interest rates simply because they are brick and mortar. They have facilities that they're having to pay to maintain. They've got staff who are on the front lines, people that are going to greet you and work with you when you walk into those facilities. And so for that reason, with this higher overhead, they may end up charging higher fees and offer lower interest rates because they still need to make money as a bank too. So that's something important to keep in mind with brick and mortar banks. Now, you answered this question on the other slide about like what kind of bank that you have, brick and mortar versus online. It is the case that some brick and mortar banks also offer online banking tools, but not all of them. So you may choose a bank that is brick and mortar, but they might not offer any kind of app or online banking website for you to log into to manage your accounts. So it could be the case that with this type of bank, you're having to walk in to conduct all of your transactions. In terms of products and services offered with these banks, number one, you're going to get personalized support, right? You have people to talk to. You could walk in anytime you have a question and there's going to be somebody there to help answer it quickly and efficiently, which is a benefit for some. And that's really something that the in-person experience, you're really only going to get with a building that is, or a bank that's there, right? You're also going to get checking and savings accounts, debit and credit cards, access to ATM networks, some overdraft protection in most cases. You'll also have access to loans, various types of loans, and sometimes investment accounts and wealth management services. You'll also have access to safe deposit boxes, which is really something that only a brick and mortar bank is going to offer you. That is a physical place for you to be able to store your valuables, not cash, because that cash would need to go into the actual savings account, for example. But if you've got jewelry that you want to keep safe, important documents like your visa, your passport, your social security card, a marriage certificate, documents that you don't want to risk losing or have damaged, you could store them there for a small cost. And it's only going to be these brick and mortars that offer that. Okay. Before I move on to online banks, I did see a question come through in the chat. So FDIC insured. So there was a question on like, what does that mean, this $250,000? This means that in the event that your funds were to be lost within the bank, I guess in a case it could be literally, or loss in that there is maybe some financial mismanagement at the bank and the bank is now going bankrupt, for example. They don't have your money anymore. It's been lost for any number of reasons, right? Given out, loaned out, not returned, received back, and the bank is without money. You are insured. You are going to get your money back up to $250,000. So if you had, for example, $1,000 in your savings account and something happened with that bank and that money was lost, it was no longer available to you to withdraw from the account, you have FDIC insurance, that coverage up to $250,000, you're going to get that $1,000 back, right? That's the benefit of banking. You have protection for your money. Whereas, again, like if you had money in your wallet and you lost your wallet, that money is not going to get back to you. There is not an insurance available for you to have lost cash returned back to you. And Becky, if you've got anything like link-wise that you could send through to the folks out there to give them a little bit more information as well, there's plenty of information online. Yes, it is limited to $250,000. So if you had, for example, several accounts at a brick and mortar bank and they totaled $500,000, if that money were all lost, all $500,000 of it, you're only going to get back through that insurance $250,000. So something to keep in mind. And then perfect. Yep, Becky is sending through information more about that FDIC insurance.
Yeah, that link will show you kind of like what is covered and what is not insured.
Mhm.
If you're unsure, they have like everything listed there.
Excellent. That's really good. And check that out. That's important to keep in mind too, right? Because let's say you are taking advantage of a safe deposit box. What kind of stuff within the bank and in your accounts is actually protected? You do want to go ahead and take a look at that. That's a great question. Okay, thank you, Becky. So you're going to notice as I click through the next two slides for online banks and credit unions, there's going to be some similar text up here. You're going to think, did she even change the slide? And I did. I'm trying to highlight a couple of the differences in red here. So when we talk about online banks, the biggest difference is that these banks are online. They don't have a brick and mortar branch for you to be able to walk into and speak with somebody in person about your accounts or some of the services and products that they offer. That kind of support is going to be offered virtually. So it doesn't mean you can't talk to a real person. It means if you are going to talk to a real person, you're going to have to call them up, or you're maybe going to have to talk through a chat feature on the website, which maybe at times just talking to a chat bot, you might not even be talking to a real person from the get-go, right? It's all online. So something to keep in mind. But because it's all online, and there's not a physical branch that's having to be maintained, and because there's not a physical branch, then maybe the required personnel, the required staffing is lower for a particular bank, they're able to offer lower fees and higher interest rates, which you would benefit from as the account holder in these types of banks, where you're paying lower fees, you're getting higher interest on the money that you put into your accounts. So could be a benefit to you, right? And what's also nice too is that these online banks, many of them, and I'm going to say many of them, but there are always some sneaky systems out there or sneaky banks that try to get through, but they're FDIC insured as well. So you get the same benefits, the same kind of protections with an online bank as you would with a brick and mortar bank. They're also really convenient in that you can pretty much do your banking 24/7 from anywhere. It's not to say that all of your transactions will post in the immediate second that you click submit online, but you're able to really kind of stop, drop, do what you need to do when you need to do it in regards to your banking. That is one of the features of online banks. But like I said, those transactions, they may be delayed, particularly if you're trying to make a cash deposit. If you have cash to deposit with a brick and mortar bank, you can simply drive up to the branch through the drive-through or walk in and you can deposit that cash pretty easily. With an online bank, since you have nowhere to go, you have to deposit that cash in really one of two ways. You may be able to deposit it through an ATM, but it's not going to be instantaneous. You may also separately have to have a different bank account with an actual brick and mortar bank where you deposit your cash there at that institution and then transfer it over to your online bank. So it could be a little bit more complicated depending on the types of transactions you tend to conduct. But if you know you are a mostly virtual person and you operate from your phone pretty regularly and you don't deal in cash too often, an online bank might be a good option for you. They offer pretty much the same products and services as a brick and mortar bank. You're not going to get a safe deposit box option because there is no location for you to store your things. But minus that, it's pretty much all the same, just with some slight, changes to those fees and interest rates, as you can see highlighted. Now, credit unions, on the other hand, I don't even want to say on the other hand, they're also still really similar. There's not a lot of huge difference between these types of banks, but there are some distinct differences between credit unions. Online banks, brick and mortar, pretty similar. Credit unions are kind of like the oddball out. And here's why. They are nonprofit organizations. So banks, online banks, brick and mortar banks, they operate to make money for themselves and for their shareholders. They're private. Credit unions, these are nonprofit organizations that are owned and operated by their members. And these members and membership is oftentimes exclusive. It's limited to certain companies, certain locations. Not everyone can always be a member of a credit union. But because they operate on generally a smaller basis with limited membership, and they are nonprofits controlled by those members, they tend to be more involved in their communities. They are sometimes able to offer better interest rates on accounts or on loans in ways that private banks, online or brick and mortar, are not able to do. But I think the biggest takeaway here is that credit unions have limited membership and sometimes limited locations, right? They do also have insurance as well. It's not through the FDIC, it's through the NCUA, which I do apologize. I cannot remember that acronym off the top of my head, but I know Becky can throw that through the chat as well if you're looking for kind of what that means. It operates similarly to the FDIC insurance. So if that money that you have in a credit union account were to be lost for some reason, irretrievable, you would be insured up to $250,000 in total for all of those accounts in the same way. So still some similarities here, right? And just like with brick and mortar banks, you've got all of these kind of same services: checking accounts, savings accounts, credit cards, debit cards, ATM networks. If it has a brick and mortar location, you will have generally access to safe deposit boxes as well. There's a lot of overlap here. So you might be wondering to yourself, well, okay, Sarah, like, thank you. You've told me about these three different types of banks and they all sound pretty similar. So like, which one is going to be best for me? If you're in the market to open up an account and you're trying to decide which of these three types is best for you, honestly, the answer is it depends. I couldn't ever really say what's best for you. I don't think Becky would ever tell a student, what bank to open up for themselves or where to put their money. We never do, but we can help you understand these options. And I hope that's what I've been able to help you do so that you can start to consider these options, consider your needs, and then make a choice that you feel like is best for you. There's pros and cons to each type of bank, be it brick and mortar, online, or a credit union. And so you'll just have to kind of weigh those for yourself based on your unique financial needs. And they do vary per person. One of the things, though, that I can give you additional food for thought on beyond what I've just shared is, well, what kind of bank accounts do you need? Like, that's going to leverage into deciding where you end up banking. What kind of accounts does that bank offer, and does it fit your needs? So, common bank accounts that you'd often see at these types of institutions include what you see on the screen here: savings accounts, checking, money market accounts, CDs, and IRAs. And to give you a little bit of information about each, I've tagged a line to each of the following. So like for a savings account, for example, savings accounts, they're great for folks who don't need constant access to their money and they can afford to leave it for a little while. So you might have some money sitting at home, literally in a jar on your desk. If that money is, well, probably relatively safe unless something were to happen in your house or your apartment or your dorm or whatever, right? But if you don't need constant access to that money, why not put it into a savings account where it's going to earn a little bit of interest? It's going to make a little bit of free money while it sits there, right? So you might be in the market for a savings account and you're going to want to find a bank that offers you a savings account. Keep in mind, there's a couple of different types of savings accounts. There's also high yield savings accounts, which are essentially the same as a regular savings account, but they tend to offer higher interest rates. It can be upwards of like 10 times the amount of interest that you'd receive on a regular savings account. And these high yield savings accounts, you can get them at brick and mortar banks, but more often than not, they're offered through online banks. So that might be kind of like a determining factor for you when trying to decide, should I bank locally with a brick and mortar bank that's here, or should I open an online account for myself at an online bank? If you're looking for a high yield savings account with a really high interest rate, you're generally going to see that through an online bank. Now, you may also be interested in a checking account. This is particularly useful for anybody who's got like an earned income or is having to pay bills. You're able to kind of readily access that money as much as you need whenever you need it. You're not typically going to earn interest on money that you put into those accounts, but if you need to, pay your bills regularly, if you need to be able to swipe a debit card day-to-day transactions, when you grocery shop, you name it, like having a checking account is going to make that easy for you to do. And so that's what you're in the market for. Make sure you find a bank that has that for you, right? Savings and checkings are pretty common. We see most folks have those kinds of accounts, and or if they don't have an account yet with the bank, like that's one of the first accounts that they open for themselves. But keep in mind too that banks also offer other types of accounts besides these two. You've got money market accounts, which is kind of like a blend of checking and savings, where your money is going to grow at a higher interest rate, but you still have the availability of accessing it a little bit more regularly, not as often as a checking account. There's not unlimited access to it, but there is a little bit. So it's kind of a blend of both. There's also CDs, which is a way for you to invest your money for a set period of time within the bank that you have, but that money does get locked up. Keep that in mind. And then there's IRAs as well that many banks will offer, and that's a way for you to really start saving for retirement, putting a little bit of money away that's going to compound and grow exponentially and be ready for you in 30 or 40 years or however long it is until you retire. So these are the common types that we see at banks, and you might need one more than the other, or you may need a selection of some of these types of accounts. If you know that you want to start saving for retirement, for example, and you want to have that account with you at the same bank that also has your savings account and your checking account, like look to make sure that that bank also offers an IRA. And if it doesn't, then you may wish to switch banks. I mean, it's really going to be up to you. But these are pretty common. Most banks are going to offer them. So if you're looking for a little bit of everything, more likely than not, you'll be able to get it there. So let's say now that you understand like the banking process in general, right? You understand the bank types that are out there where you could possibly open up an account. You've decided on an account for you to open. The next question probably is, well, how do I do it? Where do you go? What does one do? And it's really a pretty straightforward process. You want to make sure that after you've selected the bank that you've confirmed your eligibility requirements. So, like for example, if you are interested in opening up a savings account with a credit union, you want to make sure that you're eligible to be a member of that credit union, or that perhaps your parent is a member of that credit union. And so by extension, you also have eligibility, for example. You want to make sure you look into that. You've picked your accounts, you know what's right for you based on your financial needs, your financial goals. From there, you start the application. And generally, they're really simple and straightforward. Banks are not trying to make it a huge mental exercise or physical exercise in trying to round up all of your documents and things like that to open up an account. It really is pretty straightforward. Oftentimes, you can do it online, even if you're trying to open an account with a brick and mortar bank, because, like I said, some of these brick and mortar banks do have websites attached to them and online banking options. So it's really straightforward. I want to mention what you would need to bring with you. In most cases, you're going to need forms of identification. So that can include license, social security number, things like that. You might also need to bring proof of address, maybe proof of income, depending on what types of accounts you're trying to open for yourself. So I have all that readily available. I want to make a note on this screen too for any international students that might be listening in, because often we get questions about banking, specifically from international students, because the US banking system is sometimes so different from the system they're used to back home. International students can open up a US bank account here following this same process. It's just important to note that you want to have some key forms of identification available. It might vary by bank, but that's typically going to be like your passport and some sort of secondary document like your driver's license or your student ID, maybe your birth certificate if you have it with you, something that's like a government form related to domestic studies, as well as maybe a letter proving that you're enrolled in a university. So it's going to vary by bank, but like as an international student, just be aware that you might need to bring a couple of additional items that other students who are trying to open an account, US citizens, would not necessarily need to bring. So get your docs in a row, we'd say. Figure out what you need. You can always call up that bank and get more information about what to collect for yourself, to bring for the application if you're doing it in person, or to get organized to submit for the application online. All right. Now, from besides this, because I guess, I said earlier, like, okay, how do I decide what's best for me? It's very personal. It depends. I've given you some food for thought about like what bank, what account types would you need. I do want to offer you some questions to reflect on as well, because that's about as much as I can like give you, right? I can't ever tell you where to put your money, but we can help you understand which banks might better fit your needs based on your answers to these questions. What's your lifestyle like? What does convenience matter to you? So like if you are an on the go kind of person and you want to be able to do all of your banking from your phone, like you might be better suited to have an account with an online bank, right? You also probably want to keep in mind things like what kind of services do I need? Some banks are going to offer services that others don't. I've mentioned that. And then a question that comes up oftentimes for students, I know we've got a lot of undergrads in the Zoom here today. I want you thinking about like how long are you going to be at your current location, and do you need temporary or long-term services? So because so many banks offer online options, students that come to Penn State wonder, well, should I get a bank account here? And you could open up a bank account with a new bank separate from maybe an account that you have back home. That's fine. But depending on those services and the availability of online tools and online banking, you may not even need to do that. I still have two financial institutions back home in Chicago that I maintain here from Pennsylvania, simply because they operate online, and I haven't needed to transfer that money out and move it to the bank here in Pennsylvania, right? So kind of keep these things in mind. They're going to help you weigh out your decision. If you're having a little bit of trouble thinking it all through, because sometimes it's a lot, like if you're considering various bank products and services, it helps to literally make a list. So if you're trying to decide between two banks, a credit union, an online bank, write it out. Something like you see on the screen here. So let's say I'm looking for a free checking account that has a debit card. I want a mobile banking app. I also want online banking to be free. I don't want ATM fees. I would also love a cash back perk because I heard that some debit cards have cash back perks. Like, who's offering this stuff, right? And then check in with those various institutions. Check it off if they have it, leave it blank if they don't, and then let this be also a tool to help you make your decision before you end up opening up an account for yourself. Could be really useful. And you might end up like uncovering information about that bank that you might not have otherwise known about. Maybe some perks that aren't super clearly labeled online or in a pamphlet that you're reading unless you like kind of dig in there. So you could end up benefiting maybe even more than you realize by doing that kind of investigation, that research beforehand. I'm going to wrap it all up here to say that, once you get to the point of opening up an account for yourself, or, you might already have an account set. I know many of you say you have banks already, so I reckon you have bank accounts that you are already managing. Here's a reminder of some of the things that you all can do to keep those accounts in good standing and to make sure that you are safeguarding your money so that it can work for you in all the ways you need it to. So you climb that financial ladder, you build security and freedom of choice for yourself successfully. Number one, make sure you're keeping track of balances. This is going to help you to avoid fees, overdraft fees, things like that. And it's easy enough to do by monitoring your accounts online if you have an online feature or an online bank, but you can also call, you can go in person and chat with a bank teller to make sure everything's in order. You can also check balances through the ATM as you drive through. You can sign up for alerts that are going to let you know if your balance drops below a certain point or if you've overdrawn on your account. Like, these things are very important to keep you in a position of good responsibility with it all, right? I'm also going to highlight the second big bullet point here. I guess it's technically the third, but I've talked about this in a previous webinar. It's really important that when you open up an account, you are making regular transactions on it, like a savings account, for example. Checking accounts, we tend to use our debit cards pretty regularly, pay bills and whatnot. So those get pretty regular action. But savings accounts are sometimes easy to, I don't want to say forget about because it's there, but you're maybe not doing too much with it. Accounts that aren't active, like you're not depositing or withdrawing money regularly, they can go dormant. And it is possible that after a certain period of dormancy, something like 12 months or longer, it's possible that the bank might start assessing fees on that account because of its dormant status. And at some point, that money may even be taken away. It's called escheating. So it's kind of a funny word, but the government can kind of hop in and take that money out of the account if the account has been dormant for a certain period of time. And that's going to vary by state, but I just want you to know that like that's possible. So regular account management, regular transactions is important so as not to let something like that happen. It's also helpful to spend only what you have. Like, there's all these kind of fees out there that you could be hit with an account if you're not familiar with the fees or kind of what to do to avoid it. NSF fees, these non-sufficient funds fees, can come up if you are trying to pay bills out of an account that doesn't have enough money. If you're trying to write checks out of an account that doesn't have enough money, you want to avoid that. So make sure you know your balances and you're spending only what you have. And it's helpful to avoid like extra loss of money, like not only the fees, well, I guess it's a type of fee, like besides NSF fees or like low balance fees. Sometimes you have to have a minimum balance on your account. Aside from that, there's also ATM fees out there that are worth avoiding. And to do that, you can use your bank's ATM. You can get cash back when you're shopping instead of having to use a non-network ATM. So there's some workarounds there to keep your money within the account and not having to kind of give it up to these fees that exist out there, right? And then lastly, I'll just mention protect yourself from fraud. Particularly those of us who are looking at checking accounts or online banking, where there are folks out there who are trying to get a hold of this information. And via the internet, it's so much easier to do so. Please be vigilant in protecting your personal information. Keep your contact info up to date. Don't share your debit card number, your credit card number, your account numbers, that's all personal for you. Make sure your passwords are strong, protect your devices. If you've got password protection on your phone or those biometrics, right, your face or your thumbprint or whatever it may be, make sure that your devices are secure so that your accounts remain secure as well, right? That's your money. We want you to have it whenever you need it. Okay. So that's banking basics in a nutshell. We kind of covered a lot of information and the start to finish process of like what one would need to do in order to open up that account for themselves. If you have more questions, let me hear them now. Like I would love for them to come through in the chat. I don't know if anything came up in the Q&A. I don't think it did, but if you're looking to submit a question anonymously, you can use that. Or you might just feel like you're in a space where like, this is good, Sarah. I'm going to kind of chew on this for a little while and I'll come back and make an appointment with Becky. You absolutely can do that or follow up with some of these other resources that we have here today. Outside of that, that's all I've got for you. So I want to take questions if they're here, comments if you have them. But otherwise, just thank you so much for tuning in to the very last webinar of this semester. We really appreciate you rounding it out with us and hope that we'll see you again come January 24th when we return and talk about paying for college in the spring semester. Thanks, everyone.